Money on my mind, looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Poole Locke friends and family here. Welcome to the Poole Locke YouTube channel. I'm James Locke. Today we're going to answer some of the Ask James questions of the day. So we have this first question from Jonah. Jonah says, what do you think is better as an inflation hedge, gold or Bitcoin? So look, Jonah, both of these things are often touted as inflation hedges, and they can be in certain circumstances, right? The problem though is they're not really suitable investments for retirees. At least, with stocks, you can get some dividend, right? You can go into high dividend stocks and get 4 or 5%, which hopefully that dividend will increase over time. Even if you're in stocks that don't pay much of a dividend, right? That should still increase over time. So this is particularly important when building a retirement portfolio focused on generating retireable income streams, right? There's some income component. So the first problem with both gold and cryptocurrencies like Bitcoin is that number one, there's no income being generated, right? So you're kind of stuck with just a capital appreciation investment. And if they go down in value and stay down, now you could be sitting there through a good chunk of your retirement, and they're the opposite of an inflation hedge. You're essentially in an inflation drag. This is why many financial advisors recommend focusing on investments that provide both potential appreciation and current income. So like dividend growing stocks or real estate investment trusts, right, REITs. And also, if you could divide the two, I would say this: gold was, it was argued to be an inflation hedge in the past because it was pegged to the US dollar. And there's a finite number of dollars. There's thought to be a finite amount of gold. And the reality is, what is inflation? Inflation really isn't prices going up. Inflation is US citizens, and the devalue of the dollar, right? The dollar goes down relative to other currencies. That's really what inflation is. Of course, when the dollar drops in value, we feel like our prices are going up. So it's a little bit of semantics, but it's meaningful because now, if the dollar were to drop in value to inflation, well, gold should hold its value, right? And the theory is that gold's a good inflation hedge, but we've been off the gold standard now for over half a century, and because of that, gold really hasn't worked as a reliable inflation hedge over the last few years. Now, instead, consider looking at companies with strong pricing power and growing dividends, right? They've historically provided better inflation protection for retirees needing income. Okay, so that's gold. Next, Bitcoin. Bitcoin is considered to be kind of the new gold, perhaps, but it's too untested. It's too volatile. It's too untested. And only time will tell whether Bitcoin becomes, the big currency, inflation hedge or not. And I happen to believe, Jonah, that Bitcoin's just too volatile to be a reasonable currency. For retirees especially, this volatility can be particularly dangerous when you're relying on your portfolio for regular income distributions. So again, I get really nervous when people put a significant amount of money in Bitcoin and they're anywhere near retirement, whether it's for an inflation hedge or as a growth tool. Instead, consider building a diversified income portfolio with a mix of dividend-paying stocks, bonds, and perhaps some alternative investments like preferred stocks or municipal bonds, depending on your tax situation. These can provide both inflation protection and, more importantly, the steady income stream that most retirees need. So again, I think there are better ways to give yourself an inflation hedge in retirement, particularly through investments that provide growing income streams rather than just the potential for price appreciation. So, Jonah, that's a great questions, understanding inflation hedges, gold, and Bitcoin. So thank you for that fantastic question. If you would like to send in your question, like Jonah did, you can do so by emailing them to poolelock@poolelocke.com. Moving on to our second question. This is from Jessica. She says, my attorney tried to sell me on a living trust, but I decided to create a will instead. Do you think that was the right move? Absolutely. let's expand on the differences between wills and trusts, especially in the context of retirement planning and ensuring reduced risk and volatility in estate distributions. Well, firstly, it's crucial to clarify that both wills and trusts serve as essential tools for estate planning, but they operate differently when it comes to probate and asset distribution. As you mentioned, a will does indeed go through probate. This legal process verifies the authenticity of the will presented to the court and ensures that assets are distributed according to its terms. However, contrary to a common misconception, having a will doesn't eliminate the need for probate. In fact, without a will, probate can become even more complex and prolonged, as the court must determine the rightful distribution of assets based on state laws. So probate proceedings entail costs, which can vary depending on the complexity of the estate and the state's regulations, right? So these costs include court fees, legal fees, possibly executor fees, all of which can diminish the overall value of the estate intended for your heirs. Now, furthermore, probate is a public process, meaning that the details of your estate, including its assets and liabilities, become part of the public record. So this lack of privacy can be a concern for many individuals who prefer to, say, keep their financial affairs confidential. Now, additionally, probate can be time-consuming, potentially taking several months or even years before your heirs receive their inheritance. So this delay can cause financial strain and uncertainty for beneficiaries who may be relying on those assets for retirement income or other financial needs. So there's a lot of things to take into consideration, right? Now, a living trust offers several distinct advantages, particularly for those looking to streamline the estate distribution process and kind of minimize probate-related challenges. So with a living trust, you can transfer ownership of your assets to the trust during your lifetime. As a result, when you pass away, these assets are not subject to probate because they are owned by the trust, not by you personally. This mechanism allows for quicker and more efficient distribution of assets to your beneficiaries, bypassing the delays and costs associated with probate. Now, moreover, a living trust provides privacy. Since it does not go through probate, the details of your estate remain confidential. So this aspect can be particularly appealing for individuals who value discretion and wish to keep their financial matters private from prying eyes. Furthermore, a living trust, it really allows you to include specific provisions that govern how your assets should be managed and distributed. For instance, you can stipulate conditions under which beneficiaries receive their inheritance, or include clauses that disincentivize challenges to the trust terms, right? This flexibility and control are not typically available with a will, where the distribution is subject to probate court oversight. However, it's essential to consider that establishing a living trust involves upfront costs and effort, right? Including legal fees to create and fund the trust. Now, this process requires transferring ownership of assets into the trust's name, which may involve paperwork and coordination with financial institutions. For some individuals with straightforward estates, the simplicity of a will may suffice, especially if their primary goal is, basic asset distribution without the added complexity of a trust. So, in conclusion, whether choosing a will or a living trust was the right move really depends on your individual circumstances, financial goals, preferences regarding privacy, and control over asset distribution. Consulting with a qualified estate planning attorney can provide personalized guidance to ensure your estate plan aligns with your retirement goals and efficiently distributes assets to your heirs while minimizing risks and delays. So that's a great question, and I hope this kind of clarifies the considerations between wills and living trusts in estate planning for retirement. Hey, thanks for the awesome questions today. As always, if you would like to send in your question, you can do so by emailing them to poollocke@poollocke.com. If you like what you heard, go ahead, like and subscribe to our channel. I'm James Locke, your retirement income source. See you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear. Savings in